There we go. Hi everyone. I am just going live. So I'm sorry I ran behind. It's 12:45. I thought I would do 12 to 12:30. It's 12:45 and I apologize. I had a couple of calls and I had to deal with some stuff there. Okay. So if you've been waiting for me or you were fitting me into your lunch break, I apologize. It's going to happen sometimes. Most of the time I will have an open day and I'll schedule it in, and sometimes something just comes up, but that's kind of what happened today, and I'm sorry about that. Okay, so hi Stephen. Yay, so I'm glad you're here. So this is what I'm going to do. Throw anything at me that you want me to have a look at, but my plan is to kind of run through each of the charts and have this as purely interactive. It doesn't last long. If it's your first one, this is 20-25 minutes long, generally not long at all. And so let's go through and have a look at that. Okay, so I've got again, for those of you who don't know, I've got a 6-chart opening, 6-chart layout. 15 minutes on the lowest, then 30 minutes, 1 hour, 2 hour, 4 hour daily. So the reason I have this is that as I run through instruments, it becomes incredibly easy at a glance to see if there's some strong trends. So if all the charts are just going in one direction or all the charts are going down, there's money-making opportunities there, potentially. Like the best likelihood or probability that there's some money-making opportunities there. It's too early. I haven't started drinking yet. Anyway. It's got to be after 5 o'clock somewhere in the world, right? So, so that's the main reason. So for beginner traders, or for if you find that you're struggling to find like market opportunities, or like it looks too choppy or you can't see anything, this is a good way to go to. So I can do 4 windows, but 6 windows is ridiculously easy because it becomes obvious if something is trending. So let's see if I can find something, case in point. So I'm on this one, for example, and here it's kind of mixed. It's going a bit choppy downwards here, but on this side, it's on the way up. So your brain is going, okay, it's not the same. Each window should look the same. They should all look the same with multiple different time frames. So as you run through it, it starts to show you when there are trending opportunities. And the whole idea of this is, if you only want to trade the 4 hour, this will still work for you. But if you want to trade the 15 minute, it just immediately gives you that confirmation. So I'm looking at a few things here. Again, if it isn't, let me show you something that's clearly all trending up, and then you know it's a good idea, and then we can have a look and see what that kind of looks like. But if something doesn't jump out, then there really isn't anything. So I want to comment on Apple here. Apple overall, I like the look of this because there's very little sideways motion. It's got some clear moves on the 15 minutes and it's got clear moves on the 30 minutes, and they're going in different directions, but it's just not haywire. If you compare that to something kind of like this, looks a bit messy, EuroCAD, this is just messy. Okay. So let's start with the dollar index. Start with the dollar index. Okay, so what's going on the daily? On the bottom right hand side, it's wanting to push lower. We spoke, if you follow my stuff, which I know most of you do, this has been a long time coming. Well, there was no doubt that it made more sense for the dollar index to come back into this area, came right back, tapped that 50% fib level on the nose, sort of basically 95'd it, and then has started to head lower. So what do I think is the likelihood that the dollar index, like what I think is going to happen? I think the dollar index is probably going to continue to weaken. I also think at the same time, the markets are potentially going to tread water until the elections are over. Less than 2 weeks away. Okay. If anyone here is a massive Trump fan, and I'm going to offend you if I talk, I'm not going to be disparaging, but I'm going to kind of lay out what the likelihood is going to happen. If I'm going to offend anyone, that is not my intention. I understand that people are divided on this issue. I myself, I've said it before, I had a relationship with someone who had a similar condition, NPD, to Trump. So I recognize it. But if you have never encountered it before, you can't recognize it. It's impossible because they're that good at navigating our personalities. They're very good at it. And it's their survival technique. That's all they know how to do. So they don't mean to be that way. They didn't create themselves. They were that way. Okay, so dollar index, dollar looks to be weakening. Okay, but I also think we need to talk about what's going on with the dollar index in the bigger picture. The bigger picture, ladies and gents, it's range bound, largely. Okay, largely. Sitting between 99 and 90, it just couldn't get over that 100 level. And it's broken the uptrend. So when a trend is broken, so you have an uptrend of high lows, high highs, when it's broken, that doesn't mean it's now going to go into a downtrend. It just means now we have to wait to see what it's going to do next. It's range bound. Okay. Going to euro dollar, although we could see the euro heading down lower now, if the US dollar decides to drop, it's going to push everything else up. If the euro weakens and the dollar is weakening, that means the euro is really weak. And the fastest way to confirm that is to go through the other euro pairs. So then you look at euro GBP, is that also heading down? Okay, that's trending down. Just look at the 15-minute chart now. Just look at this chart now. Is it trending lower? So euro yen also trending down. Euro Swissy also trending down. Euro CAD dropping here, which is similar to euro dollar. Euro Aussie dropping a little bit, generally drifting down. Euro Kiwi trending down beautifully. Look at that. I missed that. Look at that. How cool is that? Look, I was bullish on Euro Kiwi anyway, but as a standalone chart, that looks amazing. So my point is, in every single chart we looked at for the euro now, the euro at least currently is busy dropping for whatever reason. But the US dollar is also potentially wanting to do that. So let's go look at sterling. So sterling is interesting to me. It is range bound also on the monthly. Why? Well, because actually the dollar is range bound. Excuse me. So GBP is range bound, euro dollar is range bound. They're range bound. The next question is, can the euro move the US dollar? Yes, it can. The biggest cog in the machine is the dollar, the US dollar. The next biggest cog is the euro. And then you get smaller ones. But if the euro really has something happens, it's going to move the US dollar. It's the only other thing that can move the US dollar. But generally speaking, it's the US dollar that kind of moves everything else. Okay. So, looking at it now, sterling actually looks, on the daily, looks principally more bullish than bearish. Which makes sense, because the dollar is weakening. Aussie dollar. So Aussie dollar is no clear trend. This is a beautiful example of no clear trend. So in the bigger picture, they're potentially ranging against the US dollar because the US dollar doesn't really know where to go. So that could be the next 6 months, the next year, next 3 months at least. But within the next few weeks or the next few days, we could have a trend. So right now, the problem is that it's largely no clear trend. It was going from a high to a low. So let me walk you through this. From a high to a low to a lower high to a lower low to a lower high. But then it suddenly did a higher low and a higher high. So it quickly changed trend and then it broke that immediately. That's significant, meaning it goes into a trend, changes the trend, immediately breaks that new trend. That the signal when that happens is ranging. Basically, you immediately zoom out, immediately go out because this is not normal behavior. Or you go look at the weekly, you go up the time frames, you go look at the weekly, you go look at the monthly. So there's no clear trend. So what does that mean in terms of practical day-to-day trading? It means that if you find a trend on the 15-minute, 30-minute, 1 hour, assume that it's not going to last forever. Assume that you have to take your profits at 1-to-1, 2-to-1, and 3-to-1. Just go in with your eyes wide open because the daily isn't going to follow through on anything just yet. If you see that on Australian dollar against the US dollar and you see the same behavior on Kiwi dollar against the US dollar and you see the same behavior on Euro dollar against the US dollar, the obvious problem is the US dollar. And then the question is why? And right now, the US election, it's the biggest election in our lifetimes. And it's global, whether people care about it or not. Okay. So what I'll do while we're on that, and then I'll go through the charts, because for anyone who's watching this, they're only interested in the charts. I'll do that, and then I'll talk a little bit about what the election stuff is likely to be like. This is trending well. It's a nice little uptrend there, Kiwi dollar, US dollar, but look at that daily, it's range bound. So I would mark off where the top of that range is. There could be some shorter term opportunities, but Also, if I get in and then it immediately changes direction, I can't be surprised. So it's all about trading. A lot of that is about having a realistic awareness of what could happen. Just having it there. It's just knowing what your expectations are, because that in itself is a protection against that. So dollar yen is dropping. Why? Because we've got a weaker dollar. It's also longer term does appear to be dropping down. I think that's going to continue down. So if I was going to do an intraday trade of everything so far, dollar yen is probably the best until it gets to that key level. So it's got some room to go. Dollar Swissy trending lower as well. Weaker dollar. It all makes sense. So dollar Swissy, dollar yen I really like. In fact, interesting, because euro dollar is kind of stalling a bit at the moment. But dollar Swissy is trending lower too. It's not stalling exactly the same way. It just doesn't look as bearish. They're not 100% correlated. They're about 90 to 95% correlated. So nothing so far really jumping out at me. Euro GBP is a mess on the daily. It's just a nightmare. Stay away from that. Euro yen. Also a bit of a mess on the daily. Euro Swissy dropping lower. Look at that daily producing a bearish candle. So what does that mean? Well, it's in a downtrend. The longer term trend is down. So we could see that it could continually head down. Although we have technically got an uptrend on the 4 hour, this could, if it breaks that low, it's starting to lean towards the idea that the market's going to head lower. So there could be something there tomorrow. Maybe not today, but tomorrow. That's a mess. Euro Aussie. So Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi. I'm bullish on the long run. But the easiest way to see it is when you look here. So when you look at the daily, you could see, especially if I put in, I think it's best to just kind of mark that range like that. It's been range bound. Let's bring it tighter. Let's just make it now. Let's make it relevant. There we go. Here's your range. It's broken. Ideally, a retest of this and a continuation would be great. I spoke, and all of you will know this, 2 months ago I spoke about Pound Aussie going long, and then it kind of did, and then it failed, then it went low, then it immediately came back up. We'll have a look at that in a moment. So Euro Aussie, I like the look of that. Euro Kiwi is going to go the same way. It's a little bit more choppy, and you can see these deep retracements, but it is averaging to the upside. So of the two, clearly Euro Aussie looks better at the moment. Pound Yen climbing a little bit higher. Pound Swissy also climbing a little bit higher. Pound CAD climbing a little bit higher. So you can see the difference. A lot of the Euro charts are dropping down. A lot of the GBP charts are climbing. So right now, GBP is stronger for whatever reason. That daily looks pretty good. So I'm leaning towards the GBP pairs to the upside. Okay, not so much Pound Kiwi. Let's look at Aussie Kiwi. Aussie Kiwi trending lower. Looks good on the daily. That looks really good. What happens over time? Sorry, my nose is itchy and I can't seem to scratch it, and I don't want to full out scratch it, so that's why I keep rubbing it. I was going to say that with more time and experience in front of the markets, your comfort level with charts, with like, is there something tradable here or not, improves. You start to go, it's not worth my time. Or you go, actually, I'm looking at the daily here, and this means nothing to a beginner trader, but to a more experienced trader, you're like, that actually looks pretty good. It's broken the previous low. It's kind of, you've got to ask yourself, does it look like it's kind of diving lower? And it kind of does. It looks like it's pushing lower. And so it's starting to break these lows here as well. So yeah, there are possibilities that could be something really good. The way in which I would do it, if I was worried about this as a level of support, these recent lows, you know, potentially if I was worried about that, the way I would then do it is to mark this low, and if price dropped below that, came back up to retest it on the 15 minutes, that would be an opportunity to go short. Aussie CAD. Okay, Aussie CAD is overextended. So look at the daily, look at all those 6 or 7 bearish candles, producing a bullish candle. It's overextended. This looks like the potential for a swing low, which means it's probably then going to come back up, all the way back up to 94. So if it comes back up to 94, there may be shorting opportunities there. Then there might be some shorting opportunities there. So this could be a swing trade setting up in the future, and in the shorter term, there could be some opportunities to the upside. So if I marked that level gently, so if I just kind of threw in a little kind of a thing there, maybe a round number, 0.94 will do. I did that. That gives me an area where I'm looking for it. So if this does ultimately turn into a swing low, what is my what's my Fibonacci there? I have a setting. I can't get it to my default setting, but it looks like this. There we go. So there's a 50 that overlaps with it. Nothing fantastic about that. Measure up to that one, and I get a 382. So 382, so there's something there. It's not wow, but there's something there. So that 382 could be something. So there could be some opportunities if this is really going to continue on upwards. There could be some shorter term opportunities all the way up to there, potentially. So worth putting on a watch list there. That's Aussie CAD. Aussie Swissy. Same thing, look at that. Break below that level of support. I mean, that's a crystal clear. It's not a crystal clear. It's not crisp, but it's a pretty clear level. Any movements back up to that would be great. So I guess where I'm going with this, because I'm just discovering this in front of you right now, there could be let's call them shorter term and intermediate term opportunities on the Aussie pairs that are overextended that need to retrace. The confirmation of that is if today closes as a green bullish candle, and today's Wednesday, right? And then the next day breaks above the high, so that's Thursday, tomorrow's Thursday then we've got a confirmed swing low. And then the likelihood is that it's going to head up. And if you know about clusters, if you find clusters close to those key levels, then that kind of just starts to add to the case that that's where price is going to want to go to. Okay, cool. Aussie yen. I'm just having a look at this stuff. Don't like Aussie yen as much. Kiwi CAD. That's a quick retracement, but that could be an opportunity. Kiwi CAD could find resistance where it is now. I would look at the 4 hour or 8 hour. A bearish rejection candle right where it is now, closing in on my one. It's closing in 4 hours time, so I can check it again in 4 hours time. Again, Kiwi yen. Okay, so that was Kiwi Swissy. Kiwi yen not going anywhere, so pass on all of those. If you're a new trader and you're finding the market doesn't appear to be you're getting in trades, and no matter which direction you go in, the market changes its mind. It kind of is that way at the moment, from what I can see. There aren't any long-standing trends at the moment. They come and go. Okay, let's look at gold. So far, my favorites were generally some of the GBP pairs to the upside, some of the Aussie and Kiwi pairs that have broken down a level of support on the daily and are about to do a retracement back up to test those levels of support for resistance. Those are my favorites. Gold. Although gold is technically in an uptrend. Higher lows and higher highs. Although it is. The question I would ask myself is, Adam, if gold was strong, like really strong and bullish, would it be looking this way on the charts? And the answer is obviously no. If it was really nice and strong, I would see this. So the answer, the only rational, logical deduction I can make from that is, I can see it's climbing, it's a little bit bullish, but it's not strong. And so the question then is, should I trade it? Do I have the same degree of wind at my back, kind of underlying strength, not even confidence, not even about what do I think about it, but is the market demonstrating to me that it really knows where it wants to go? It's not really that great. So I can keep checking on it, but it's not ideal. So it's a pass for today, for now. Silver, same problem. Okay, copper. Okay, so I wanted to say to you earlier that you'll get to a place and you'll see all the charts are going in the same direction. And this is a good example of that. Clearly, across the board, bullish. Does it mean I buy now immediately? No. It means I have to wait for a bit of a pullback. A nice pullback here would be great. A nice little pullback on the 4 hour would be fantastic. Back into the moving averages. That would be great. So copper looking really good. Okay, palladium, all of these, not great. Okay, let's look at oils. So, that's a mess. No doubt it's a mess. And it just looks like a mess on all the charts. It's just it's saying don't trade me. And crude oil, not great. So can I look at it and work out stuff? I can go, look, it's at a level of resistance now. It is producing higher lows into that. And the momentum indicator at the bottom here is just trending upwards. So the general underlying kind of message is it's bullish. It's more bullish than bearish. But again, is it the best opportunity on the markets today? Doesn't really look like it. Okay, let's look at the indices, US indices. So I want to mention here that all of them are pretty much now having retraced back into the daily, back into the previous highs, back into kind of previous highs down here, which is a significant factor. They're all potentially able to turn around now. But look at the price action here. Nice bullish candle, then a rejection candle, then a bearish candle, then an indecision candle, and currently an indecision candle. So the overarching message here is indecision. Why would the markets be undecided? Well, I think all the non-critical analysts will say stimulus. They'll be like, it's because the market's waiting for stimulus. And if it moves up, it's because of stimulus. And if it moves up next month, it's because of something else. It moves down next month. Stimulus is going to come. Like, it's going to happen. So I don't think that's a factor. We know that it's going to happen. Whether it happens this week or next week, it's going to happen because the US cannot survive without stimulus packages. The number of homeless people, jobless people, all of this is on the rise. So it's going to happen. I'm going to digress a little bit and talk about it. It's a beautiful, excuse my language, but it's a beautiful clusterfuck. And it's completely created by, actually in this case, the Republican Party. It's not actually Trump. It's the Republican Party that's created this scenario. They're torn because obviously they're now not looking like they're going to be the likely winners. And they, if anything, they just want to make sure that if they can finish, they can make it look as though maybe they weren't completely the worst people in this situation. And the Democrats produced the HEROES Act, which was their first stimulus package, which made sure that money didn't go largely to corporations because they don't buy the trickle-down economic crap. They don't buy that. So they said we want oversight to track any of the money that goes to the big guys, and we want to make sure that equal money goes direct into the hands of people further down who need it. The Republicans, and we want to make sure there's PPE, so there's money for hospitals, for nurses to help treat coronavirus, to like gear and money going towards testing so that we can reduce the coronavirus. And literally this is what Republicans went. They went, no, none of that, but we will send money to the big guys, the trickle-down stuff. And when you know something about the history of the Republican Party, they have gained all of their status as being a political club, a VIP club for wealthy people. And they weren't that way. You go back to the time of Lincoln, they didn't have any money. They were just a party that decided that black men shouldn't be slaves. And then they lost their way. They made so much money as a result of becoming the popular party after a while. They weren't the most popular party, but popular. They made so much money, they lost their way. Now, for them, money and power are their reasons for existing. And so they can't think straight because every decision they make is not about the people. It's about how do we gain power or retain power or make money. But every decision they make is based around that. So they're screwed because with the stimulus packages, if they're not in power, they want to moan about how the deficit has gone out of control under the Democrats. But they've created the biggest deficit in the history now in just 3.5 years. So they're caught. Any more money they spend, they know they're going to be partially liable for it. It's like just this ridiculous mess. It's just a ridiculous mess. So the point being, the stimulus has to come because people have to be supported by it. So the markets, it's going to happen. And the market's bobbing up and down based on that, to me, is not actually what's going on. I think it's much more about the election. I think the election is what the markets are uncertain about. And so the reality is that Biden's intention is only, he doesn't want to upset the system. And this is what amazes me. People don't understand that Biden was vice president for 8 years. During the recovery, he literally helped Obama help the US recover from the 2009 financial crisis. So he's a known entity. Like, he's done it before. He's a known entity, and people acting like he's an unknown thing. He's not. He's got a proven track record of doing the right thing. He's going to make sure everything is stable and then try to recover things and clean up the mess. That's it. So he's only going to tax people who make more than 400,000 people. Now, how many people do you know who make more than 400,000 a year? That's tiny. That's like less than, in the UK, that's like 5% of the population, less than. So it only impacts a very small amount. It doesn't impact the people who need as much money as they can to survive at all. In fact, this is the beauty of it. The benefit made from getting some tax money from the big corporations, as well as the people who make that money, $8 trillion will go back into the economy to help repair it, to help reduce the deficit. It's insane. Just doing that will help recover the economy. And we all need that, because if the US economy is in trouble, we're all in trouble. So we all need that, which is why this is important. So what do I think the markets are going to do with regards to Biden being elected, which it now looks like he is? Markets are going to be fine. They're going to be happy with it. They're going to get a small bill, which is not ridiculous. They're going to see a minor increase, and they've been riding a freebie for about 8 years now. Actually, no, for about 4 years now. They're going to have to give some of that back, and that's fine. They're going to do well. They have a choice. Either give a little bit of a bigger, pay a little bit of a bigger bill now, or give a tip, whichever way you want to see it, or the economy collapses entirely and now you're in big trouble. So, like, it's a no-brainer. So, okay, so then let's have a quick look at the news that's going on at the moment. I wanted to just go see what was on the calendar. I was looking at this one quickly. Give me a moment here. Wanted to see what news is on this week. So the point is, stimulus is coming. Overall, the market should be fine. I just wanted to see, and for some reason, it's not connecting me to what's going on here. Okay. Give me a second here. Now I have to go through and do the whole thing again. Okay. Long story short, while I'm talking about that. Okay. So what I think is going to happen on the election night, there are real potential outcomes. I'm not disputing the fact there could be multiple outcomes. The best case scenario is that the negative impact on the voter, holding back the voters, trying to disrupt the elections, trying to steal it and trying to break it, the negative impact on that will be minimum. Okay, so that will be minimum. This is the best case scenario. And the votes will be counted, and Biden will hit 270 immediately, like by 11 o'clock in the US, which is about 5 o'clock outside, 5 a.m. outside, somewhere around there. And that'll be it. And it'll be crystal clear. He'll hit 270, and Donald Trump will be about 90 to 120, somewhere in that area, maybe 130 in that area. And that's it. And there's no disputing it, and it'll be a clear one. Now, part of the reason it looks like we might get that is because 30% of the population has already voted. All right, and this is the most amazing. I heard this expression, which is true, is that people don't go to the polls to vote you in, like, because you're an unknown entity. They go to the polls to vote you out. So when you see big movements like this, statistically, it's to vote someone out much more. They're driven to do it, which is why they're standing in line for 8 hours at a time. They're not doing it for their health. They're doing it they are doing it for their health, actually, as it happens. So the point being, it currently looks like the best case scenario is going to be a relatively actually clean transition. And let me explain why. Although there's threats of violence and stuff, they've actually dropped away in the last week or two. And more people are distancing themselves from the Republican Party and from their partners and going, I don't know anything about this Trump stuff. I don't know anything about this. I always thought we should do this and blah, blah, blah. More people are doing that. And as the inner circle starts to dissipate, the ability to follow through with all kinds of crazy threats falls away. Like, it's not really there. And he's genuinely scared now. He's genuinely scared because he knows he's committed so many crimes and felons. He's got multiple lifetimes of worth in prison. Like, there's 500 different charges that can be laid against him for so many different things. So he's in real trouble. So I think that's going to be the most likely outcome. And I'm scared of how this is going to go down, but I actually think that's what's going to happen. Worst case scenario is there's something we haven't seen yet. The Russians have managed to hack the ballot systems, or something that we haven't seen yet, and they'll manage to do it. Or there's going to be enough of a dispute finding ballots have been thrown away, or there are just going to be riots from white supremacists that just decide to go nuts during the night, and then the numbers are close enough, so maybe Biden's at to, I don't know, maybe he does something insane like Mussolini and he just calls it dictatorship and he just tries to do it. He's lost the power though. I don't think that's going to happen. So all of that would be a big surprise. But I think worst case scenario is the numbers are close enough. Maybe Biden's at 290 and maybe or 270 and Trump's at 230 and he tries to basically take it through to court. I don't think it's going to happen. I think the Republicans know they're not wanted by the majority of people. And we also forget, and this is really important, I'm sorry to talk about this, and I'm going to wrap it up in the next couple of minutes. We forget something. It's not just Trump versus Biden. It's every other Republican senator that's up for election. And you're finding across the board, the Republicans are being voted out entirely. And they're being outcashed. I mean, as an outrage fundraising, they're just being... So there's a clear message from the majority of Americans that the Republican Party does not represent America, the majority in America. And therefore, and this is good, the more we go that way, the more the majority is going to come into power if that's the case, and the calmer everything is going to be. And so the market will be fine. The market will go back to what it was like before that. That's all I wanted to say. I'm going to stop rambling about it. I just think a lot of people don't really have all the stats in front of them. Let me try that thing again. Let's just see if I can get into this one. I want to have a look at this. Sorry, guys. I meant it was going to be 20-25 minutes, but let's see how this goes. So, again, it's not really about that. I just think there's a massive change coming. I don't know what's going on with this. Okay. So, I'm looking at the daily because we could turn around today. So, in other words, today we could close higher. The reason I would stay away from the indices generally is because they're at that point where the daily could turn around. And so you can see all the multiple timeframes are just going sideways. If it closes as a bullish candle today, that could mean then that tomorrow and Friday it climbs up again, which is what it's, in theory, it's in the right place to do it, if it's going to do that. We look at the Nasdaq. Beautiful. Coming back into the previous highs, this looks really, really good. Could it go low? Of course it could. What does that 1 hour look like to you? To me, that 1 hour looks bearish. That 1 hour looks like that wants to go down. What does the 4 hour look like? So far, it looks like it wants to go down. Okay, so they look like they do want to head lower. So it's dangerous to short it now because it can still turn around. It could drop down and then turn around when the US comes online in 90 minutes and then it starts going up for the rest of the day. So it's less costly to just sit out and let's see where these indices close by tonight rather than lose money on whichever way you likely go, because it's more of a gamble if you don't know which way the market's going to go. The FTSE is ranging sideways completely. You can see that there. The DAX pushing down, man. That's got a downtrend on the daily. Lower highs, lower lows. So one of the ones I might consider doing would be shorting the DAX. So why would I do that? Well, the US isn't really clear about where it wants to go, and the DAX is looking bearish. So shorter term shorts to the downside would be, relatively speaking, when the US markets are bullish, you want to buy the strongest trends. When the US markets are going sideways or down, you want to short the weakest trends. And the markets are going sideways. So, because they basically are the kind of weathermen. French CAC not looking good. Euro stocks also trending lower. So maybe the DAX and the stocks trending lower. The, what else? Nikkei is still climbing. S&P. S&P is a bit overextended. Sitting on that level of support. Might head down a little bit. Might do that. Let's look at cryptos and then we're wrapping up. Any other questions you want me to look at? Cryptos look good. Look at that. That's really good. That looks pretty cool. Just broken through a level of resistance. There we go. Bust through Bitcoin 12,000. I haven't looked at this since it was down here. This is literally the first time I've noticed they've broken up through that. That's good. So any pullbacks to test that level of support would be good, and that would be on the 4 hour. So pullback to test 12,000 looks absolutely good. If that's going up, Ethereum should be waiting to break through its level. So Ethereum needs to get through that level, but Ethereum, when it moves, it'll be really good. There was a while back when Ethereum was outpacing Bitcoin. It doesn't look like it's doing that at the moment. And let's have a look at a few of the others. Tesla dropping down, doesn't look good. Apple setting up potentially a bullish candle there, so that could be a swing trade to the upside. So that could happen. Okay, and then Eurobund. Eurobund, I'm waiting for this to come back down. Oh, there we go. There's my bullish candle. That was quick. Look at that. Gap down, bullish candle. So I'll see how that closes, and potentially that will be the opportunity to go long tomorrow if it carries on up. So Eurobund could be the case there. So, ladies and gents, that's it from me. I'm just going to show you something as we wrap up, and if you're offended or whatever, you can leave. But I just want to show you some really interesting stats here. So, so far, this percentage is dropping. Okay, so Trump is losing his base. That's really what's important here. It isn't even that Biden's gaining. Trump is literally losing his base. It doesn't look good, and so there's an issue now. And I think one of his biggest things he did yesterday, which was insane, is he started saying everybody needs to be locked up, and then a reporter asked him a question. He said, "You need to be locked up. You need to go to jail." And he was just like insane. He was like, it's like he's just not even sober anymore. And so that was a bit of an issue. And then the other one here is this one here as well, which is a really good one. So this is basically a collection of they give you a forecast of this. So remember that they need 270. If you don't know what the Electoral College votes are, it's basically each state gets a weighting in terms of its votes. So you get the popular vote, which is individuals voting, and then you get the weighting on the state. And so basically the weighting is really what you win. So California's got 55 electoral votes, and Texas has 38. Okay, so compared to something like, let's see, something obscure. Okay, so Iowa's got 6. So politicians obviously focus more on trying to win over certain counties over others, so then that's where they get to their 270 the quickest. And so just be aware of that. Texas is the really interesting one, because that's about as red as you would ever imagine it could be. Hasn't been blue in 30 years, and they're literally now 50-50. I know they say here 62%, but actually it's on the line. It is not outside the realm of possibility. It's not likely, but it's not outside the realm of possibility. Biden could go blue, and if they go blue, yeah, then he's for want of a better expression, he's screwed. It is just done. And so what happens is if he lost Texas, the implication is there's no way Republicans can win if they lose like the heart of the Republican state. So if that's what happens, and then it's done. So there just won't even be any fighting on that. So that's where it gets really interesting. But there's different votes here. So you can see you've got 351, 163, 270. Whoever gets to 270 first is effectively the new president. Okay. 279 to 187. They're not all shiny. CNN is more conservative. CNN is 232, 205. So they're very neutral. But it does give you a really good idea about that. Okay. So that's it. I just wanted to kind of show you that. I'm going to leave you with this. So again, got my eye. I like the bunt was pretty good. Some of the stocks, let's see what happens this afternoon. If you find by 3-4 o'clock UK time today the markets start climbing on the US indices, then potentially there's some longs over there. It could close as a nice bullish day. Otherwise, those are the pairs. So again, hope you found this interesting. If you liked the talk where I gave you some feedback on the upcoming elections, cool. Let me know. But that's it. Otherwise, I'm going to end the stream, and this will go up live. And if you have missed it, you can access the recording. Okay, so there's some stuff, but I would advise caution. I would just say for the next week, unless there's a really good trend, unless you're trading something like commodities, which might not be influenced by what's going on, or maybe bonds or something different. But I would say for the indices and currencies, and then for things like gold and oil, I think they're pretty much tied at the hips, joined at the hips for the election. And so unless you see them really trending very nicely across the 4-hour as well as the 15-minute, I'd stay away. And I'd also think about risking less, 0.5% or less per trade. I'd also make sure my trades get to break even. I bet you'll find that 60% of your trades will get to break even and will be break even trades, and then the rest might make money or lose. Whereas I think a month ago there was a good chance that a quarter of your trades would be break even and the rest should make money. Like right now, the market is just not set in its ways. The big money is going to reduce its exposure for sure against volatility. It just doesn't want to be exposed to any swings. So they're going to step out. So what happens is it's the difference between thin running water and soup. Like when there's a lot of people in the market, it's like soup. It's quite thick because there's just a lot of participants. As they start to exit, it becomes like water. It becomes very liquidy and it can splash around. So it's a very bad analogy, but that's the idea. Cool. All right, guys. Thank you very much. I hope you enjoyed this. I'm going to try and do another one again tomorrow if my day allows for it, and hopefully, and then we'll see how that goes. All right.